Yo, Akam, what's happening? What's good?
I'm alright, bro.
Okay. So you're trading for the week.
Nah, I'm just demo trading. I'm not trading my life right now.
Okay. Okay. Let me try and see if I can share my screen with you guys. Yo. Can you see my screen? Yo, can you guys see my screen?
Yeah, but it's a bit. It's
Okay,
a
can
bit
you see
dark.
the screen?
We can see the screen, but it's dark.
I
Can you
think
change
it's because of
the background?
the background.
Yeah.
Okay, this background was just meant for the camera, you get me? So let me just put it back to white. Okay. It's a bit more clearer now, eh?
Yeah.
Alright. You guys can see my screen. Right, so I was just trying to check out little things. And by the way, my my back testing subscription just finished yesterday, and something just came into my mind. I was like, "Oh, before I pay for this whole cruise, let me do how I used to do when I didn't have money to backtest, to buy backtesting software." Yeah, I hear a lot of people complaining, saying that they don't have money to buy backtesting software. They can't afford to pay for this thing for TradingView. You feel me? So let me show you what you can do if you don't have money to pay for TradingView. Yeah, this is what I do. So this is kind of like Friday. So I used to mark out. Remember, this is how I mark it out. This is more like something you should know by now if you've been watching my YouTube videos. I do mark out days. It's an important thing for you to mark out your days. You get me? So this is Friday, and I marked it out, and this is Monday. So probably I use this whole day with Sunday as previous day, right? So this is previous day high, and this is previous day low. You get me? So on Monday, as you can see on Monday, eh? So let's say this is me backtesting what happened last week, right? So before you hop into your week, right? Before you hop into a new trading week, you want to always go back and go through what happened last week. You feel me? You want to always go back to check what happened last week so that you can understand what the market is doing, what the current market condition is, right? You want to really understand what the current market condition is so that you can anticipate the same thing to happen. You feel me? So yeah. So this is Friday's high, previous day high. You get me? And then what happens here is, remember, we are just trading the London session and the New York session. You feel me? So Asian range, we don't trade that. I don't trade that. I don't know about you, but for me, I don't trade that. You get me? I do more of my trades during New York and less trades during London. But the strategy that I shared on YouTube literally plays out every time during any session. You just have to choose based on your time zone, right? Yeah, so remember the chart also is always on UTC -5 New York. The time is always on New York, right? Here. So yeah. So this previous day, you get me? So what am I waiting for? For the strategy, I'm waiting for previous day high to be grabbed. Once previous day high has been grabbed, you want to see a displacement breaking market structure either on the 15-minute or the 5-minute time frame. You don't go lesser than 5-minute time frame, right? if you're just starting out, you don't go lesser than 5 minute time frame, because bro, if you go lesser than 5 minute time frame, you're just in for disaster on the 1 minute time frame, because that's going to trigger a whole lot of emotions in you, right? And you're just a beginner, and you're having those thousands of emotions being triggered in a second. That's crazy, right? It's crazy. So you should stick to 15 minutes, 1 hour, just basically the higher time frame. Just avoid 3 minutes, avoid 1 minute, except you have some level of experience in the market. You feel me? You have some level of precision in the market. You understand price action so well that you understand that price is fractal, and that means anything can happen in the 1 minute. But you know how to manage your emotions well. You can literally play with the 1 minute time frame. You feel me? So for now, just stick to 15 and 5 minutes. Right? 5 should be the lesser one, right? 5 should be your short-term time frame, like your lower time frame, your entry time frame. So this is it, right? This previous day high. So what am I waiting for? And now, if you don't have trading view subscription, this is one thing you can do. Come lower here, come low, and then you see this place here, scroll to the left or scroll to the right, right? So make your charts, make the last point of the candle here, right? You don't want to see this, right? So you just make it like this, and then what you do is you come here and then you keep tapping this one by one, like something like this, right? You can see that previous day high now has been grabbed. Now you can see that the candlesticks is basically coming out one after the other. You get me? So that's the aim, so that you don't see what happened next. You feel me? So just giving you a sense of accountability there, right? Why you're studying in hindsight. So this is an easier way to study in hindsight. You feel me? An easier way to study in hindsight. So you can see that previous day high has been grabbed there, and then boom, we have this. This is the low. If you go on the 5 minute time frame, this is a low, right? This is a high, and this is a low, right? So let me get this guy. Let me get the arrow guy. Yep. So as you can see, this low here, right? This low has been violated by this candle. The candle that the recent candle, if you can see that, the recent candle I just violated that. So you get me? And we mark out this fair value gap because every fair value gap is important. Right now, we are not looking to buy because previous day high has been grabbed, and then there's a market structure shift to displacement candle, and then we go a bit further, and then boom, the fair value gap is formed, right? The fair value gap is formed. You can see from the low of this candle to the high of the last candle, right? That's the fair value gap. You get me? So you just see, then it tapped into this. Now for you to see how a fair value gap could be tapped into, like, you know, a lot of us will miss this trade. We will miss this trade, right? But you can see that even during my gap, I don't know if you guys can see that, I just zoomed into this candle. You can see that even during my gap, I left some space, right? See this space here? I left some entry space, right? So what you want to do in order to avoid this, because that's how some of you miss your trade, and then you now complain that you just missed the trade. That's why some of you miss trade, because you don't really do what a trader is meant to do. I got to realize that open, high, low, close is the secret, if I can put it that way. It's a secret that is going to help you not miss trades. Yep. Because if you use the high of this candle, if you check here, open, high, low, close, the open of the candle, the high of the candle, you see where my cursor is. H is for the high of the candle, L is for the low of the candle, C is for the close of the candle. So you should always be with a pen and a notepad. Why? So that this is the starting point of the fair value gap, right? So you tap on that candle, right? Once you tap on that candle, you check on the high. Once I tap on this candle, let your eye, if I tap on this candle, let your eye come to this place, the high, right? So let me do it again. Okay, it's on the green candle right now. What's the high right now? I want this class to be engaging, right? Yeah. I want this class to be engaging. So I don't know if you guys can type in the comment section. Can you guys type in the AK? Just try and check for me if you can type in the comment section.
Sending message is not allowed.
Okay, so let me try and fix that so that you guys can send in messages. I want you guys to follow this concept because this concept is going to help you guys, right? It's going to basically help you guys to not miss trades. You get me? Because a whole lot of us, we miss trades a lot too. Understanding this open, high, low, and close concepts is going to help you. You feel me? All right, check it now for me, AK. Just check. Can you send in messages now?
Yeah, I just dropped a message.
Okay. All right. So let's go back to the chat. So the last message that I sent in, okay. Oh, you guys are already here. Okay, the last message I sent in this live stream, and we should use that like the chat box, right? So, okay, let me go back to the chat. Please, I want you guys to be engaging too, right? Let's make this fun for both of us, right? Let's make this fun and understanding too. All right, so I was saying that we miss trades because of the way we draw our boxes, right? So some of us would have missed this trade. Look at how price just tapped in. This is what we call let me write that down. IOFED. This is what ICT is called IOFED, right? It's just a term. You know him now. He has a term for everything. So institutional order flow entry drill, right? So that's what IOFED is. In case you see IOFED somewhere in any trader's chart, that's what it is. Institutional order flow entry drill. So institutional order flow entry drill simply means the candlestick tapping ASAP. Like it doesn't go to 50% of the gap. This white line here is 50% of the gap, which is consequent encroachment CE. And then it doesn't fill totally, right? It doesn't just, once it just taps in, then it leaves the gap and then smash TP or probably head over to smash liquidity or something. You get me? So a lot of us will miss this trade because some of us might see, I just zoomed into this screen. This is the normal chart that we might be seeing, right? This is the normal chart that most of us, this is what we are looking at. Most of us look at candlesticks like this. And then we draw this thing and we miss it. And then we keep our entry somewhere above that by a pipette or a pip. And then price will just come and miss the whole stuff. And then we say, oh, we missed that trade. Not knowing that you drew that stuff well. This tool didn't justify the whole stuff. Remember, as a price action trader, these tools, all these indicators down here or anywhere, they're just helping us understand the chart. You feel me? Just helping us understand the chart and just mark out certain things and then, but they will not help us understand the price readings and stuff like that. You get me? So that's where this OHLC comes in, open, high, low, close, right, of a candlestick. You get me? If you understand dynamics of a candlestick, so you understand what the open, high, low, close is. This is just basic stuff. You get me? So now what we will do is, let me go back again. Let me make it bigger. So in order for you not to miss your trades, you want to know, because the fair value gap is formed by 3 candlesticks, right? 1, 2, and this guy. 1, 2, 3. right? It doesn't matter if it's a bearish candle or a bullish candle. It's just three candles. One, two. It could be bullish, bullish, bullish. It could be bearish, but anyhow, so far it's three candles and there is a gap. You feel me? That's a fair value gap. And this is a CB, sell side inefficiency, buy side, sell side imbalance, buy side inefficiency. You get me? So this is CB. You get me? These are just terms. You can just call it bearish fair value gap or bullish fair value gap. Simple as that, bro. Should not come and stress you with terms. So you tap the low of this first candle, and then once I tap this guy here, this candlestick here, because this is the first candlestick, right? The first candlestick of the bearish fair value gap, you always want to look at the low, right? Because this is the low. The low is what formed the fair value gap. So if I tap on this candle, you read the price of the low here. Maybe just send it to the chat box. Let me see if you are following. If I tap on any candle, look at, and I tell you to look at the low, which is L, or look at the high, which is H. You just look at the figure and send it to the chat box. So I'm tapping on this candle right now. So what's the low of this candle right now? What's the low of this candle? This candle slow is important, but not that important, because that's not where we are expecting our entry. We're expecting our entry in the other high of the candle's high. You get me? So what's the low of this candle? And I'm going to take it off to check if you guys are still with me. Did anybody catch that fast? 2021.74. Whoa, I just got one answer. 2021.74. I just got one answer. Oh, come on, guys. That's not fair enough. That's not fair enough. All right, so it's 2021.74. That's the low of this candle. Okay. And then what's the high of this candle? The H. I just tapped on the candle. What's the H of the candle? I'm going to just allow a few seconds, and then I'll go to the chat box again. What's the high of that candle? What's the H of that candle? That's where your entry will be. Do you understand me? That's where your entry would be. Your entry is going to be on the H of that candle. That's on the high of that candle. The wick is the high. Some candles, they don't even produce wick and they just give you a high, right? So I'm done. Hope you guys see what I mean. This candle doesn't have a wick, but the open, it's going to be the same thing as the low. Check this out. Check this guy out. Check this guy. There's no wick and there is still a low. Why? The open is the low. Some candles don't have, you see 2020.66 and the low is 2020.66. You can see. So it doesn't have a wick, but it doesn't mean, right? It doesn't mean if you have a wick or not. The last point of that candle is the high or the low. So what's the last point of the high of this candle is 2021.22. Let me see if someone dropped it. 21.22. Okay. All right, so the high of this candle is basically let me tap it again. 2021.22, right? So that is where your entry will be. Now see the high of the next candle. The high of the next candle is 2021.26. This one was 2021.22. That means this one have gone 4 pipettes, like just 4. 2021.22, 0.23, 0.24, 0.25, 0.26. That's high enough. So that will pick your entry up, right? And then we have the other one that went deeper, 2021.28. We went past 2.6, we went past 2.2. So by now your order would have been filled, right? So this is why some of us miss our trade. When we now draw this guy, our entry stuff, we can now just keep it here. We'll now come and keep this guy here. You see, didn't fill the order. And then this is how we are seeing the charts. This is how we are seeing the charts. Let me show you guys. Are you seeing? That's how some of us will mark the chart and then we say we missed the trade. Because we think, you see, it looks like it triggered, but it didn't trigger. Because you felt you just needed to draw only this tool and then use the parameters of this tool to take your entry. Don't use the parameters of your tools to take any trade. Make sure you use the parameters of the candles to take your trade. That's a simple hack that majority of traders don't know, right? That's a simple hack majority of traders don't know. You feel me? So don't use the figures on the tool to take your trades. I know it's going to be a tough one, but you can literally try. You can literally try. You get me? Just make sure you use the figures on the candlesticks. You get me? The figures of the candlestick, that's what you use. You feel me? So, as you can see, price literally gave us the entry. Previous day high grab, breaking market structure with a displacement candlestick, leaving behind a what? A fair value gap. A fair value gap. So 1:1, 1:2. So 1:2, we start from 1:2 and 1:3. 1:2, don't go more than 1:2, or don't go lesser than 1:2, and don't go more than 1:3. This is a simple method that you can use to pass your Profem. I think one of these days I should talk about how you can pass the Profem challenges. I've been passing and I've been losing a whole lot of Profem challenges. So I understand some things that could help you in passing Profem challenges. Now also observe this fair value gap here. Remember, I'm just studying price action with you. I'm trying to study what happened last week. So yeah, so you study with me too. So this is how I just see my candle. So after this has been tapped, observe this fair value gap here. This is a 15-minute fair value gap. So price came in, tapped here. This is 1:2, and then I'm leaving it for 1:3 also. This is a 1:3, and this is a 1:2, right? If you trade 1:2 on a Profem account, and then you have a win rate of 50%, 60%, you can see that you'll still be profitable. If you trade 1:3 and you have a win rate of 30%, your strategy works only 30%. That means you can take 10 trades and lose 7, and you still pass that Profem account. That's if you understand your strategy properly. That's if you understand your strategy properly. Do you understand me? So 1:3 price, you see price. Remember, what are you doing? You're just tapping here. You can't subscribe for the whole trading view stuff. So you can see now this is the price action I want you to look at. This fair value gap here, this is what we call an IFVG, inversion fair value gap. Inversion fair value gap can serve as support and resistance. As a smart money trader, this is our own dynamics of support and resistance. These are our own support and resistance. A fair value gap that has been violated. Look at the candlestick that broke that fair value gap. Look at how, like, this one was just wicking through, trying to see if we can respect the gap, but it didn't. Look at the candle that destroyed that gap, right? Destroyed the first. Once this guy here, this low, the first candle that formed the fair value gap is violated. This guy, I don't really trust the gap again. Because remember, a fair value gap is formed by 3 candlesticks, 1, 2, 3, or 1, 2, 3. Once this high here, this guy, maybe I took this trade here and he came and he violated this guy. Once this is, that's why my stop loss is here. As you can see the stop loss is above the high of the first candle that formed the fair value gap, right? Sometimes the high of the fair value gap might be inside here. It might not necessarily be the low or the high. Look at this one. It's the high, but this one is not the low. This is the low. But still, in this case, this is where I'll put my stop loss, But if my stop loss is here and price comes here to my SL and violate this guy, I'll just know that this is a losing trade. I just know that I'll just zero my mind and leave the trade, you get me? But let's just focus on what we are, on what we have here. You get me? This is a fair value gap. Price did what? Broke through. And then upon price breaking through this gap, what did he do? Look closely what he did there. He dropped another gap. He dropped another what? Another gap. Perfect. So a fair value gap inside what? An IFVG. Inside an IFVG is basically a very strong fair value gap, right? So you can see that he dropped a fair value gap, right? And take profit was not yet hit. So this is a good place for a re-entry. Yep, that will be your entry. And when did this happen? You see? That could basically be your entry. You get me? You tap there and then you can see price. Price went lower. Price went lower to smash the 2R. And then probably because price has now finally grabbed this guy here, this liquidity here, right? You might see some reaction to the upside. That's the only time you expect price to reverse. This is another thing. I hope you should write this down, Sha. when you expect price to reverse is when liquidity has been grabbed. If you see liquidity being grabbed, it's either price is going to reverse from that point, right? Or you will see some sort of consolidation at that point. You get me? So yeah, you see price literally got this guy, and then you see price starting to buy, starting to reverse at some points, as if it's not going to hit the 3R, but it's just a normal P. It's just price action tricking you. You get me? And then 3R was smashed, right? Price literally did what? Price came back to this guy again. Now, this is another term in ICT. This is another term in ICT. When price comes back to a fair value gap after triggering a fair value gap, right? When price comes back to that fair value gap again, it's called a reclaimed fair value gap. It's a reclaimed fair value gap. Price came back to reclaim this gap again. So when the price come back to reclaim this gap, right? So since I don't trade during this period, this IFVG, now this is where the risk management, discipline comes in. This is where discipline comes in. Since I don't trade during this time, look at the time. It's past London session. So this is 6. And so from 7 is when I get interested, right? So from 7, you can see the price came back down, and then 8 a.m. The 8 a.m. candlestick, New York time, is always very important. Always watch the 8 a.m. candle, New York time. This 8 a.m. candle took price, right, into this guy. This could even be a new self, right? This could even be a news driver taking price back to balance this guy and then reclaim. This reclaim fair value gap would have been where my entry would be. Maybe let's say I'm a New York trader and I missed this London setup, and I missed this London trade here because this is a London trade, right? See the entry point. Look down here. Look down, you will see the entry is 3 o'clock. That's London session. London session is from 2 o'clock to 5. Right, so if you want this indicator on your chart, just go to your indicator and type ICT Q zones. Just type ICT Q zones. You feel me? So let me just do that for you guys. Come here, right? Type in ICT Q zones. You can see I already have it marked out as favorite by this guy, Tradinator, right? Click on that and it's going to pop out, right? And then you do your settings. You feel me? So that's just it. Now, if I had missed this guy as a London trader, now this would have been my second trade as a New York trader. New York session trader, right? That would have been my second trade. I'm entering based on what? I'm entering based on and I'll target 1:2 first to take my partial. Here, I'm going to take my partial 1:2. It's a must. I take my partials 1:2, and then leave the rest to run for what? 1:3. You get me? Leave the rest to run for 1:3. So this is where I would have taken my trade. And notice where the stop loss is. This is the high that formed that candle. Let me get this guy out again. This is the high. This is the first candle, second candle, third candle. This is the high, right? But this one is higher than this guy. So I just drop it here, right? Where it's safe, right? I just drop it here when it's safe. You feel me? And then you basically take your entry here. You get me? Take your entry here, and then that's just it. And then boom. Allow trade to smash, take profit as a New York trader. So in that day, so in one day, you have 3 setup play out in one day. That's the beauty of you being an ICT trader, a smart money trader. 3 setups this day, just one day, 3 setup, just one day. Now, what's the 3 setup? One, first, previous day high, grab. I'm showing you guys 3 entry modules right here. 3 entry modules. This is the one here. I'm not yet shared this one on YouTube, but this is the one I shared on YouTube, right? Previous day high or previous session high, whatever, grabbed, break market structure, leave behind fair value gap. This is the first entry, right? Now, this fair value gap here is the only fair value gap in this swing. And it's also the last fair value gap in this swing here, from here to here. It got violated with what? See the violation here. A displacement candle, a volume candle, right? Now, when price comes back to that gap after doing this thing here, now, after doing this thing here, right? Let me take out all these guys. After doing all these things here and then breaking this guy, see, he broke this guy here. That candle. After breaking this high here, this guy, what did he do? He dropped behind a fair value gap. This guy here. That would be your second entry, right? But the time is not going to be favorable because that's outside of our time window. So we may allow that one to slide, or we may reduce our risks on that one. We may still take the trade, but we are going to reduce our risks there. And then that's the first one, right? And then price may just go give you your whatever. Then you can see that during New York session, price still came back to that place. So if you rushed to enter your trade here, see, at the end of the day, we still had a trade here during New York session, right? 8 o'clock candle came, reclaimed the gap. So we didn't use the IFVG as entry, although it played out, but we used reclaim fair value gap as our entry, right? And then what happened? You see price do what? Smash, take profits. You feel me? So that's just how it is. For the day, this is what happened on Monday last week, right? This is what happened on Monday last week. This is what happened on Monday last week. You get me? So after then, you see where is price bouncing from? You are done for the day already. You are done for the day already. But look at this gap here, right? Since you are done for the day already, you don't want to be in front of your chart again during this period, right? After London close, you don't want to be in front of your chart again. Else you'll be trying to frustrate at some point. But you still observe price action. From here, you can see that price started respecting bullish fair value gap instead of bearish fair value gap. So that means what happens? There's a change in market delivery, right? There's a change from respecting, it went from respecting bearish fair value gap to respecting bullish fair value gap. You understand me? So you can see it dropped the gap here. This is all during Asian session. So you understand the order flow. This is you understanding the order flow of the market, right? And then this is a new day. The new day, what do you want to do? You want to mark out previous day high. This is the previous day high of yesterday, and then this is the previous day low. Anticipating what? You're anticipating this type of setup to form again. Once you mark out this guy and you mark out this guy, you're anticipating this type of setup to form again, right? Then price went close to that place, as you can see. And then price did what? It broke that guy, right? Now, what are you waiting for? You're waiting for this low to be broken with a displacement candle. If it doesn't happen, you leave it. If it happens, then fine. So you can see price didn't do anything like that. So this day, we are still maintaining bullish structure. We are still maintaining bullish structure, bullish fair value gap. You can see during London, it was a bullish fair value gap that respected. Now, right before price grabs this liquidity, price used this gap to carry this guy here, right? So this is one entry that one of my guys, they have this entry set up, right? They're smart money traders. There are people that trade like this, eh? All they just look out for is the closest fair value gap before liquidity grab. I don't know if you understand what I'm saying, but before the liquidity is grabbed, they look for that price leg and look for the closest one, and then they use that to grab the liquidity. Once liquidity has been grabbed, they step out. You get me? So that's another one. Now I'm showing you all of these things so that you're not gonna use everything. Remember, I'm showing all these things so that you're not gonna use them. I'm showing all these things so that you can pick one from them and then use it. That's just it. Pick one out of these setups and use it. Don't go and use everything. If you want to try and use everything, you're going to blow your account. You're going to lose woefully if you don't master it properly. You get me? Use one, gather enough data on it, and then use that to make your trading work. You get me? Make your trading work. So that's just how it is. Now, moving further, you can see that price didn't come down to give us anything worthwhile. So see, we didn't have a trade. Even for me, there's no trade here, right? Although some people who want to mark here, you can see the concept of a reclaimed fair value gap, right? Price used this gap, went high, came back down again, and used that gap again, right? So that's a reclaimed fair value gap. You understand me? So since it's past the time of trading already, this day is messed up. So Tuesday, we'll not have a trade on Tuesday. You get me? will not have a trade on Tuesday. For me, there's no trade. So immediately when you're backtesting or when you're studying Hindsight, you want to go faster to where this is how you don't waste much time. You want to go faster to the seasons and the sessions you trade, right? So where is previous day high? Is this the high? Nope. This is the high. The high formed during Asian session. You see that this guy here, remember I marked this thing out here. This vertical line is the marketing, the end of Tuesday. So this high is lesser than this high. This high is higher than this high because it grabbed it. So that's the high. So that's what we are going to be using as previous day high to anticipate our setup to do what? To form. So all we are just waiting for is for this guy to be grabbed and then give us a break of market structure, and then boom. As you can see already, it has been grabbed, but not during our session. So we just allow price to play. We just allow price to play. Price grabbed, not during our session, and then we are looking for this low to be grabbed. This low here, right? Let me get this guy out. Remember, you're looking for this low to be grabbed with displacement candle, and it looks like it's doing that already, right? It hasn't been grabbed. You can see price reversed. It hasn't been grabbed, so this is not valid for me. You get me? It's not valid for me, and it's not even time for London. It's not London time, so you just chill a little bit, and then that's London session, and then we have that candle there, and then we have this one here. Then do we have a gap? Do we have a gap? Yes or no? Let me know in the comment section. Do we have a gap? I'm waiting. Do we have a gap? Yes or no? With the current price action there, do we have a gap? I need a reply before I move on. Do we have a gap there? Okay. So we have a gap there, yes. And then what do? You want your entry is going to be on the high of this guy here, right? So what is the high of that guy? I want to mark it out because this is not allowing me, right? Already. So let's just shift this. The high of this guy is 2029.26. So why I'm doing this is if you don't have money to pay for subscription, this is what you're just gonna use. My subscription fee just expired yesterday. I'll try and fix it up so this thing doesn't stress me. But if you don't have money to subscribe, this is how I used to do when I didn't have money to subscribe for TradingView. This was my replay button, you feel me? And then I'll move it to the extreme like this, you get me? Just for accountability's sake. You feel me? So this is a gap. The high of this candle is 2029.26. The next candle that came, you can see that the high was higher than that. The next candle that came, right? 2029.47, 2647. So higher, that will be your entry. You get me? So London session traders, they have this set of form again that formed on Monday, form again during what? London. And what time did it trigger? 2:45. So your entry will be here, and then your stop loss is going to be here, right? You target 1:2 for partials, and you target 1:3, and also you target opposing gaps like this. You target opposing gaps like this to take profits, partial, maybe partials there or something, because price, you don't know what price might do. It might come here and then boom, start going up. So you want to take money. You don't want to leave money on the table, right? So you can see that price literally did what? This is a quick 1:2. Would have taken our partials here. When price gets into this gap here, this is where you take your partials. See what happened here? After price tapped here, perfect 1:2 smashed, but see what happened here? This is where your partials will be taken because of this guy here. But still, you keep it for 1:3 regardless, because you're trusting the trend. But so that you don't get to chicken out, all this type of stuff, or you don't get to get your stop loss being hit after you've seen profit. A clean 1:2. You take partials out. You get me? So you mark this out again to see if price is going to reclaim it during New York session. Remember the concept of reclaim gap. So price came back down and then did what? Closer to stop loss. Now this is where a whole lot of people freak out. Me myself, I will freak out. You understand? But I will only freak out if I didn't take profit. That's just the gist. You freak out if you didn't take profit. Your emotions is going to get triggered if you didn't take profit at 1:2, when this strategy requires you to take profit at 1:2, or opposing fair value gaps like this. So when price comes back here, maybe this is for the New York traders, but it's not New York. You see, time is 5:45, so I'll not even be interested in this trade, even if it's a reclaimed fair value gap. The time is past 5, so I'm not taking the trade. You get me? So we wait for what? We wait for New York. New York, as you can see, price went into that gap, and then it took us out. You feel me? So this go really vex you, my G. It go really vex you. To vex the hell out of you if you didn't take profit here. You can see how realistic I am right now, right? So I didn't take this guy. And this guy coming down, not to even come and smash, to take this guy again the third time. Now this is another thing. Once it reclaims the second time and it doesn't go ahead to grab liquidity or something, and it starts coming back up again into that place, this is a good place for you to close your trades. Close your trades at break even. Manually close it at break even. You get me? Once price triggers this and leaves this candle, lock your trade, because it can't come to a reclaimed fair value gap twice. Right? For me, that's my own rule. You get me? That's my own rule. See what will happen. This is what is going to happen. You took partial profit, and this day maybe you just took out just little percent. Maybe you just made 1% or thereabout. You're fine. So far you made profit. Good. Move on to the next day, bro. You get me? So you move on to the next day. See what happened. Price tanked, and then it will piss a whole lot of you off. Now I know most of you keep your stop loss here. It's not safe, amigo. It's not safe. It's too wide at some point. But if your account size lets you keep your stop loss here, fine. Yeah, you can do it. But this is the ideal place for the strategy. This high here, you feel me? So price went down, smash TP as usual. A whole lot of people will be pissed here. Will be pissed here, my guy. Emotions will be triggered. Someone will even pick a trade here after London close, because of this thing that happened. You want to pick a trade here normally now. I know it because I've been doing it. I used to do it, so I know. And see what you are going to suffer all through the night. Instead of you to just go and rest with the stress of this one, you want to come and be staying in this type of trade. I'm just talking to you as if I'm talking to myself. Hope you guys you grab what I'm saying, Sha. And you can feel the way I'm feeling while analyzing this thing, because it's not just analyzing with the logical mind, but with also your emotional mind when you're backtesting. Include what you would have done emotionally if you were to sit down in front of the chart. You get me? If you were to sit down in front of the chart, you get me? Would you have stayed all through that time because you just want to rush in because some emotional shit happened down here? And no, you don't want to waste that time, right? You don't want to waste that time. After London close, just go and rest. Go and look for nothing and do. Trading is stressful enough for you to come and start stressing yourself all through just because you're looking for money. If you're looking for money, go and look for a 9-to-5 job and do. Go and look for something that is going to give you daily money and do. This is not what is going to give you your daily money until you master it, until it becomes an income source, right? So that's previous day high. And then we took out a little percent from Tuesday, remember? And then Wednesday, we made a little profit. And then Thursday, let's see if any price action literally played out, right? Let's see. See, all these things is valid, right? This is an IFVG. But it's not just time. Time is of the essence. Time and price needs to be in alignment. This is not the accurate time to trade. But you see the price is trying very hard to go down because this is an IFVG. It's an inversion fair value gap. See the candle that broke it. And then, but time is just the ish. You feel me? So take note of that. And then on Wednesday, Thursday, you're waiting for what? Okay. Grabbed. Previous day high has been grabbed. So what are you waiting for? A break of market structure with a displacement candle. So I'll consider this guy a structure here, although this guy will be an ideal place to call a structure. This is also a structure somehow to me, right? Now, after this has been grabbed, look at this guy here. Look at this guy here, this gap. After this guy has been grabbed, this is a structure on a 5 minute. Remember, don't go lower than 5 minutes. After this guy has been grabbed here, this is a gap here. So remember, your entry is going to be on this candle's high. This candle's high is 2030.69, and then your sell limit on your MetaTrader is going to be 2030.69, right? And then your stop loss is going to be above this high. Now, because of because of PTSD, because of you, some of you might have trauma effect, post-trauma. this guy here, right? Remember this fair value gap, and then instead of you keeping stop loss, you kept. So because of post-trauma stuff that happened yesterday, you guys want to keep your stop loss here. I know a lot of you want to keep your stop loss here. You want to keep your entry here, so that you'll be safe. I know you want to keep your stop loss there. Here. It's cool. Let's say we keep our stop loss here. You see that 1:2 will not be feasible to attain, right? You see, before we reach 1:2, look at all this, right? This is why I don't even like this whole high. But if I'm trading, let's say I'm trading different prop accounts, one stop loss is going to be here. Definitely the long-term accounts that I don't take trades often, this is where the stop loss is going to be. But my short-term account, obviously, trust me, I'm going to keep my stop loss above the first candle that formed the fair value gap, which this guy. That's where with a little pip above is small, you get me? And then 1:2. First for partial profit. So here, partial profit will be taken. So we look out for what? We look out for fair value, opposing fair value gaps again. So that, remember, that's what we are doing. That's what we are watching. This guy here. I don't know if most of you can see, but that's a gap there. I'm going to subscribe this guy this night so that I don't stress myself again like this. So, quick one. For those of you yet to join my group, my private group, then that slot is still open. You feel me? You get me? That's a massive, crazy offer and at affordable rate. You get to pick my brain. This is what I will be doing every day. Trust me, I'm set up for this whole shit, this whole trading P. And this is what I'll be doing every day, every morning, every week with my private guys. I'll show them things like this on the charts. Like, it's just me walking through my chat with you. You get me? Sharing my experience with you. A lot of amazing stuff. Give you my in-depth secrets. Little things that I discover. What do you think? Things that I discover, the first place they are going to is my private group. If I discover even an investment platform and something that can give us money, right? This year, that's what I'm sourcing out for, something that can give us money, right? So if I see the first place I'm taking it to is my private group, right? And then we bag the thing together. We have a crypto coin. I'm also working on crypto. So I have literally partnered with a lot of crypto traders. So if we have a coin that's going to do 10x, 100x, I share it to my guys, and then we all bag the money. So that's what the private group is all about. Your $10 in crypto, you know how crazy that shit can be. You feel me? So that's what we are doing. $75 after my birthday, which is first March, which is this Friday. After this Friday, damn, it's going out. It's going out, man. It's going back to 150. So you take chance, grab this opportunity, grab this opportunity, you feel me? So yeah, let's go back to the chart. You can see that price literally did what gave us 1:2 here. This is where partial profit will be taken. And also you can see this guy here. This was a gap, right? Right. So this is maybe where you want to take, maybe not, or this place now, I could take 70% off. Then probably you could take 50% off here. Right, if you're not trusting your setup, this is one thing you should trust your setup. So 1:2 is where we take partials, regardless of this thing. But if you're still scared, this fair value gap might do something. You take out something. This is psychology behind taking partial profit. Once you take out something from the chart, it means that you've not wasted your time. It means that you literally paid yourself for that strategy. It means that you literally paid yourself for sitting down to wait. Now, every day's pay is not the same. That is the difference between we traders and civil servants. We traders and people that are working in the government. Your daily pay might not be the same. Today you might get $100. Tomorrow you might get 50. Next tomorrow you might get nothing. Yeah, that's how it is. You might get nothing at all for 2 days, 3 days, 1 week, 1 month. There are traders that stay 1 month, they don't get paid. But you shouldn't be that type of trader, right? That's why you study smart money concept. That's why you have to study all these things on the charts, right? Now, some traders will stay 2 days, they don't see a trade. 1 week, they don't see a trade. And that's how it is in trading. These days, let's just say this day, see, remember, you took out maybe probably one. This was the day you took full pay. This is what I call full pay. Twice full pay. This is what I call full pay. Your 3R is backed in, your 3% is backed in. So let's say this week you've already secured 3%, and then you took nothing here, right? Let's say you're using just this strategy I shared on YouTube. You've taken 3%, 3R on your profit. Remember, your profit says you should make how many percent? 8% or 6%. So you took 3% there. And let's say maybe this time 1:2 was smash. You took 1% here, maybe partials. And then that's 4%, right? And then this day, you don't take anything. Okay, let's say this day, you took out from here another 1%. That is what? That's 5% that you've done already on Thursday. 5%. And let's say you waited for price to, give you the 1:3 here, the full profit here, right? Without checking out. You might have made 7%, just 1% to complete your phase 1 challenge with Funded Next, which is 8%. Right, and boom, you've with this strategy, right, and then you back this trade. See, this is how simple it is, bro. See, don't stress yourself. I don't know how I'm going to say this thing to you guys. Do not stress yourself. Just go into the chat and look out for this particular thing, and then if you don't see it, just go and rest. Go and find another thing and go and read a book. The reason why we stress ourselves and the reason why we look at trades too much, or we try to hunt trades where there are no trades, is because we are looking for money. We come with the money mindset. You feel me? We come in with the money mindset. We want to make money. You feel me? That's not supposed to be so. I recently lost an account. Not even I've lost. I recently lost an account trying to look for money in this market. It's painful. A life account, bro. It's not something you want to be doing. Coming into the market because you're looking for money, it's going to destroy the hell out of you. You get me? So if you're looking for daily pay, go and look for something and do. Look for something that's going to pay you and do. Right? Then another skill, whatever. Just use it to make money. While you're just following up trading on the side. This is the bigger picture, but you're following it up on the side. You're giving your all at some point, but you're not expecting much. You're just coming here to learn. The money is just the byproduct. You get me? So, you can see we are done. London close. You see that we smashed the profit. London, after see London close, see what always happened London close. See all this consolidation after London close. See this guy. After London close, see what's happening. Right? After London close, see what's happening. After London close, see what's happening. Right? After London close. After London close, see what's happening. You get me? So that's just how it is. Now we move into the next day, right? Friday. So this is Thursday. We move into the next day, which is what? Friday. So Friday, what are you looking for? This is previous day high. There's one concept known as thank God it's Friday. I've heard about that concept, but honestly speaking, I've not looked at it. But I know the concept behind that thank God it's Friday whole stuff. That's another setup, right? In smart money, in ICT's concept, you have loads of setups that you can use. Remember, I just showed you 3 back there on Monday. I showed you 3. So there's another one called TGIF. Thank God it's Friday. You get me? So it means that if the market was bearish during the week, it's going to be bullish at some point on Friday. You feel me? So this is previous day low. previous day low. So the strategy is previous day low grab or previous day high grab. So on Friday, we had a previous day low grab. Once previous day low grab, was there any structure that price could violate? No, there's no structure here. It could have been just this one, right? So price formed the structure, right? There's no gap here itself to take a trade. So there's nothing there for you. You get me? There's nothing there for you. So you play price through, and then boom, this structure now was violated. All right, this structure was violated, and then you expect price to retrace back to. Now there are loads of fair value gap here. We have this one. We have this one. We have this one. So where we have lots of fair value gap like this, I would love to pick this one. Where this guy is. I would love to pick this one. I'm going to align it to. I'm going to align it to this guy here. So here, I just wait for price to come back during New York. Boy, price is not coming back anytime soon. You can see price just flew away without coming back. So this is a missed trade. Thank God we have a missed trade, so I can just say something to you guys. Now we have a missed trade here. So our setup played out perfectly, but it was a missed trade. It was a missed trade. We missed this one for Friday. So you made a whole lot of money during the week, and missing this one shouldn't affect you that much, except you are chasing money. The only time this is going to be painful or you're going to feel some emotion is because you are chasing money. You get me? So this is just what Friday gave us, right? This is what Friday gave us, and here we are. I think, yeah, price. I was just trying to mark this out, and then this is Monday, and this is the current price action. This is the current price action that we are, guys. So I already marked out the previous day high, right, and the previous day low. See where we are. We are very far away, right? See the price action that we are in, right? We are very far away from this. So this is the price action. If you want to measure here down to here, okay. This guy down to this guy. So this is the price action. We are at premium, and then this is discount. So I will not love buying gold at this point here. You get me? So this, I'm just sitting down waiting for something to happen, right? There's nothing here on the chart right now. You get me? There's nothing here on the chart. You feel me? But I'm still going to add an alert. I literally added an alert to this zone, to this area. I want to see what will happen in this area. Remember, I said I just used the 15 minutes to backtest this thing, just one time frame, and that's what I used, right? So this area is of importance to me. Why? Because you can see we have another block, and then we also have a fair value gap that broke market structure to the upside with an impulsive move. So price could share gets, then price should just come here, move. That's what I'm expecting to see. But this 1 hour, so I'll be on the 15 minute looking for my setup to form. It may be probably inside here or something. If Monday could just close here, like Monday could just keep it low somewhere here, and then we enter Tuesday, which is tomorrow, and then we have the low of Monday above this guy. Once that grabs and taps into this guy, I expect to see the setup. But let's just watch price, right? And then we want to also check FX news and stuff to understand the week, right? And that's how it is. So that's an easy way for you to basically look at what price did last week. You get me? Look at what price did last week and then use that to navigate yourself and then to reaffirm to yourself that your strategy works. Now, this little thing that I just did now, most of you, it has been registered into your subconscious mind. When you see this strategy this week, you see that you're not going to be scared in taking that trade because you built confidence in backtesting. You built confidence in checking out what price is going to do. You understand me? So that's just how it is. That's just how it is. I hope you guys learned something. I hope you guys learned something. I hope you guys learned something. So that will be all for today. You get me? Hope you guys learned something.